And you're kind of interesting because you're self-employed, right?
That's correct.
And you've been self-employed for a long time. So you're an entrepreneur, but you have kind of a analytical view of things. I think it's important that every entrepreneur who's watching this, you understand how important it is to have a guy like Marvin, a CPA, a certified, basically someone who understands taxes and really are you a CPA? Is that what
I am a CPA, certified public accountant.
And when you're a CPA, not always, but as a general rule, the CPAs I've worked with are a little more analytical than the entrepreneur who's kind of hell-bent on growth and driving and revenue. And I think it's so important to have a mentor in your corner that can help kind of bring that analytical perspective. Do you find a lot of times with entrepreneurs that you're the only person in the room in some of these businesses that has that analytical bent?
That is right.
Okay, and that's kind of your job.
That's why they pay me the big bucks.
All right.
Help them figure that out.
Well, I'm just mentioning this because if you hire an accountant, I remember when I hired my first accountant, a guy by the name of Frank Biscup, a great guy in Tulsa here. He was a great accountant for me. And when I hired Frank, I was so frustrated that he kept bringing up these details. And he kept thinking so analytically, and he was so focused on the numbers. And why can't he just let me run my business and
make the sale?
Yeah, and Frank had said, hey, it's not so much how much money you make, it's how much you keep. And I'll never forget him mentioning that over and over and over. So I just, if you're watching this and you say, well, I would hire an accountant, but they're so analytical, I'm just telling you, you need that balance. You really do. It's important.
Very important.
Now, we're talking now about point number 7 here, costs of goods sold. So all the money that goes into purchasing or producing the services and products that a company plans to sell to buyers. Can you maybe add some clarity about what that means, the costs of goods sold?
Okay, cost of goods sold are the direct cost of selling the product, making and or selling the product or the service. And I see lots of businesses fail because of their inability to properly identify their true cost of goods sold. They tend to leave out things. For example, they leave out workers' comp insurance, or they leave out liability insurance, or they leave out the light bill on the shop. All those things are really integral part of producing the good or service. And so they not only don't call it cost of goods sold in their books, they don't use it when they go to bid their work.
And so for the Thrivers watching this, we'll put a little graphic on the screen so they can get it. But what you're saying is, let's just say that I'm a plumber. And I might say, well, my costs of goods sold are just paying my guys. My guys go out, my guys go in, and I pay for their gas. But you're saying, no, you're paying the guys to come in, to come out, and they're paying their gas, but now you're also paying for the vehicles, you're paying for the workers' comp, you're paying for the light bill, you're paying for the office space, all that factors in.
That's correct.
Okay.
A lot of entrepreneurs don't seem to realize that immediately.
And again, if you're somebody who's crazy enough to go out there and start a business and to believe...
Well, you have to be crazy to start your own business.
There you go.
Of course, I've been in business for 40 years.
So you've had your crazy, you're done being crazy now. You were crazy back then now, and now you've kind of, now it's an established business, now you're not as crazy?
Not quite as crazy.
Okay. Well, if you're crazy enough to go out there and start your own business, I'm just telling you honestly, you have to be a little bit optimistic. You have to be a little bit passionate. You have to be, and so that passion and optimism sometimes can glaze over some of these details. And that's what creates a problem. And that's why we need accountants.
That's right.
Now we get into expenses. Term number 8, expenses. This refers to all the money that has been spent to operate a company that is not directly related to the sale of the individual goods or services. So walk me through what the word expenses means in your mind.
As distinguished from cost of goods sold, which are really expenses, but they're expenses that are directly attributable to providing the service. Selling, general, and administrative expenses are more along the lines of expenses that are going to occur whether you make this particular sale or not. The phone bill in the office, the office personnel.
Could you, just because there's a lot of terminology that I want to make sure Thrivers get very familiar with, could you say that the cost of goods sold is kind of like your your variable costs, and then your
Variable costs.
expenses could be considered like your fixed costs. Like you might not have to pay more for lease this month because you sold more or less units.
That's correct.
Okay.
Very, very good. Very
Okay.
good analysis.
So what is the most common mistake that business owners make when they're looking at their expenses? Do they just miss big expenses, or what happens?
I think the biggest mistake that I see is they fail to anticipate all these expenses. And when they do their business plan, determine their startup capital or their budget for the year, that type of thing, they simply don't figure that they've got the phone bill and the cell phone bill and the office insurance and the property tax bill and things of that nature that they don't think of. And then when those items come along and have to be paid, then that disrupts their budget and disrupts their profitability.